All right. Good morning. Happy hump day, everybody. It's gloomy here. I had a bad rainstorm yesterday. Today it's just cold and kind of foggy and wet. Um, Welcome to the stream. My name is Jacob Gabbard, and this is Invest with Jacob. And we are going to be demonstrating our indicator called IWJ Pivot Point Pro. You see on the screen here. You can see where my mouse is. If I hit the eyeballs, you can see those buy and sells on the screen. I have everything else stripped off so you can see just this right now, and of course the Mentor Q levels. Um, I'll get into these in just a minute and what they mean. Um, but I wanted you to just not have to see all the moving averages. It gets a little bit crowded on the screen sometimes. So the point of showing it that way is that you can see how super simple it is. You get the sell alert, you get the buy alert. Now this is pre-market. So yellow here on the screen, this is the pre-market, and blue is post-market. We don't trade any of that because there's no volume, and a lot of what our indicator is predicated on involves volume because that is where the key levels are, and that is where the buyers and sellers often reverses off of high volume areas. And there's no volume in the overnight trading, so we don't ever trade these. It's choppy, it's ugly, you don't get great signals. So we're not here for that, but we have to have it turned on for the indicator to work properly. It needs to know what the overnight action was because the pre-market high and pre-market low are really important levels to trade off of, and you get those from overnight trading. So I'm going to turn on my key levels, my volume, and some moving averages here that I use in VWAP. So it's not too terrible. I try to keep my screen as clean as possible when I'm trading like this because more clutter equals poor trades, more mental block, more issues. But overall, we try to take all of that away simply by using a very simple indicator. Now, I say it's simple because it gives you clean buys and sells. But actually, under the hood, it's extremely complicated. It's about 175 different inputs, and that's the difference between our indicator and other indicators is we wanted to build an indicator that took all of the things you'd want to look at. So if you have like 25 things on your chart and it gets really ugly and you're trying to look at different time frames and different moving averages and different, the MACD, the RSI, volume profiles, all of that stuff, your brain can't process it all in real time. You miss things. You miss where you should have gotten trades. You miss where you should have got out of trades. And what we did is we set out to put together an indicator that combines everything that you would look at for these trading levels and then gives you a clean buy or sell off of those levels. And that's the major difference. When you have a MACD indicator, it's strictly looking at the MACD and MACD properties. If you have an RSI indicator, it's looking at the RSI and RSI properties. If you have a volume indicator, it's looking at volume and volume properties. Ours is looking at all of that. It combines all of it into one power-packed indicator that really gives you a big edge on the market. Now, all of that being said, does that mean that our indicator is foolproof? No, of course it does not. We have losing trades. That is part of trading. We have losing weeks. We've even had losing months. However, over time, we have absolutely crushed the market with this indicator. So give me 1 second here. I should have had this pulled up already, but I'm going to pull up our results for the last 2 years so that you can see that it's certainly not a perfect indicator. It is an outstanding indicator, but nothing is perfect in the market. There are no perfect indicators because if there were, we'd all be billionaires or trillionaires or name your error. And that's really the big thing to understand about trading is it's an edge. Trading is simply an edge. You need to have an edge on the market, and then you apply that edge relentlessly. And the biggest thing I equate it to is, would you rather be the gambler or the casino? And I think all of us know who makes the money in Vegas, right? The casinos make the money. And they simply rely on an edge. They know that statistically, over time, they will win. And that is what trading or anything mathematically driven, if you're at the highest levels of poker, if you're at the highest levels of sports gambling, it's all about trying to find the edge and then applying that edge relentlessly. So if you're going to win 60% of the time, then you're going to lose 40% of the time. And winning percentages are very misleading in trading. If you have questions about that, I can tell you why. But the point being, you have to play the game in a way that you can survive the downturns and let that edge play out over time. And what this indicator does is it gives you that edge without you having to calculate all of these things in your head on the screen on 5 different screens, so that you can get in the trade as fast as possible and you can get the entry as close to the top and bottom as possible. And that's really what we're trying to do, is eliminate emotion from trading, because emotion is what crushes traders. They get mad because the market did something they didn't expect, and then they revenge trade, or they chase a move and then it turns down because they're the ones getting trapped. They get frustrated because they think that the market's out to get them. Every time they put in an order, it goes the other way, all those types of things. Emotion crushes you. Think about dating. How many terrible things have you said to somebody because you were angry? How many times have you made irrational purchases because you were in love and you couldn't stand it? So you bought something you knew you couldn't afford for a girl or a guy that you really liked. You know, all of these decisions are made out of emotion, and emotion is irrational. And so that's why the stock market is so hard, is because the stock market is actually driven by emotion. That's why they say the stock market can remain irrational longer than you can remain solvent. And all that simply means is it can act in a way that is against the statistics for quite a while before it goes back to reverting to its normal behavior. If you are overplaying your hand during that time, you will go bankrupt. And that is the whole key to trading, is sizing properly, and you're having a proper risk reward structure, having proper stops, all of the things that make you successful. I pulled up our results. I have to paste them in because of the way the screen share works. I can't just put my spreadsheet up that has all of it on here. But I will paste them in and expand them so you can see. So here's our last 2 years. Let me slide this over a little bit. Okay, you can see that in March of last year, we had a losing month. In December and November of last year, we did very bad. It was not great, I'll tell you that. In August of this year, we had a losing month, and in May of this year, we had a losing month. However, if you look at the bottom line, so last year, this was based on a 100K account trading 25 contracts. You can see that right here, 35,000 on a 100K account. So that's a 35.5% return on your investment. So we build this account up. We continue to gain here. And then once we get to a certain level where we're able to increase the number of contracts because we've made enough profit, we just did in September. And September was actually a flat month. It was not great for whopping dollars. Per contract for a whopping $200 win. But we just changed to 50, and you can see last month we had a record month at $25,000 in profit to give us a grand total of about $90K overall. Remember, we started with a $100K investment. We're not even 2 years in, and we've almost got 100% returns on our money. So these are simply predicated on following the rules. So what do I mean by the rules? What are the rules? Well, the first thing I would tell you is if you get the indicator, you must watch these videos. You come to this page. You will have to give me your TradingView username. That is so I can give you access to the indicator. And then you come down and we tell you how to set up TradingView. It's really simple. It's not a big process at all. You send me your username. I give you access, and then you may have to log in and log out, or log out and log in to get it to pop up, but then you just go to your invited scripts. But this walks you through that whole process. Very simple to do. Then you set up the indicator for how to trade it. It's got some settings in there you got to set up properly. And then we give you our complete day trading strategy with all of our rules, how we trade everything, how we put in our stops, how we set up our day for success, all of that stuff. Your trend day strategies. So trend days are the enemy of my indicator. And the reason for that is we're looking for reversals, and reversals come off of support and resistance zones. And when you get to a support zone, you're looking to trade long, and when you get to a resistance zone, you're looking to trade short. Well, trend days blow through support and resistance because that's how we expand the range. More often than not, we stay in the range and we respect those levels at least the first time into them, and that's what we're kind of looking for. But some days you get trend days, and we don't trade those because when you're looking for reversals, if the trend is up and it's a trend day, and this tells you how to identify that it's a trend day, by the way, and it's a trend day, you don't want to be trading sells against that because the trend is up and it's blowing through resistance. It's not going to stop. Same thing to the downside. When it blows through support and we have a trend day set up, you don't want to be trading buys against that because you have a trend day down and you're trading against the trend. So as long as it remains in our trading range, we trade what the indicator gives us. Pretty straightforward. And then we give you our weekly swing strategy. I covered that on Microsoft last night's video. If you want to go check that out on YouTube, you can see our weekly swing strategy there. And that's all of the training there. And you watch those videos and you have all the rules, and it makes a really, really clean and simple trading tool. And that's what we're really looking for here. Now, to get it, I gave you some great deals today. Something you don't see very often is a discount on the yearly indicator. And on top of that, I decided to throw in some extra stuff. We're getting close to Black Friday. I'll probably have deals next week too. But I'm throwing in the Elliott Wave for Beginners, the Advanced Elliott Wave course, and the Price Action Training out of my Trade Waves Academy course. That's a 2-hour video on price action. You get all of that, and you get 10% off of the yearly. That is only good for this live stream. So once the live stream is over, that coupon code goes away, and you can't get it. So it's kind of a reward, and thank you for being on the live stream with me. And if you want to get the yearly, that's that. If you want to just try it out, you get 30% off the monthly with JG30. Or if you want to try my rooms, you can get 30% off of those for the first month. And then you pay full regular price after that. So some really great deals today. They all go away at the end of the live stream, so make sure you sign up by the end of that. Hopefully we have a great day. Now that we've gone over all that, let me jump into our levels real quick. Mentor Q, it is a third-party product that you have to pay for. I pay for it. It is an incredible product. They give you the best levels in the business, and it's not close. So some key ones to know what they are. The one-day max is typically about as high as the market will go today. So that should contain the move to the upside. Now I say typically and should because, again, we don't know anything for certain in the market, but these one-day minimum down here and one-day max up here, those are basically your shorelines. I use this analogy a lot. If you've been on here, you know this. We build houses on the ocean, and we know where the tide comes to 99% of the time. However, when there's a hurricane, that tide comes up and it gets into houses and floods the streets and goes past the shoreline. On big, strong selling and buying days, they can blow through these levels like a hurricane. So think of it like that. These should contain the move most of the time. However, on hurricanes, you can see the market blow past those levels. The high volume levels are where high volumes of options are struck at that price. So at 659 here, that's a high volume level on the 0 DTEs. At 665, that's a high volume level on the 0 DTEs. Your 0 DTE call resistance is where the highest level of calls are struck at today. And that the market makers want to defend these levels very much because when it gets above the call levels and below the put levels, they have to start to cover their bets or hedge their interest. And that causes a waterfall effect. So what happens is everybody's got puts stacked down here at 655. So the market maker is the one who sells those puts. So you bought the puts, for example, they sold the puts. They want to hold price above here to make money. And really what they want is they want a balanced sheet because they're just trying to create the spread between calls and puts, which is a couple of pennies, but they're trading millions and billions and millions of shares, so that stuff adds up. Well, if they get down below this, they have to start paying out those puts. That's no longer balanced for them. So they have to start buying puts instead of selling them, which creates more selling, and that creates the waterfall effect to the downside. Same thing to the upside. If they get above the call level, they have to start buying calls, and that creates squeezes to the upside. So these levels by Mentor Q, you can get a discount on them. There is a link in the description of this video for a 20% off discount. They're outstanding levels, especially for day trading, that you can use to kind of in conjunction with the indicator. I look at them, so right out of the gate here, we're in a sell situation. And the way we know that is we got a sell right here. And then we got a buy. So you might think, oh, it's in a buy. Well, then we got a long stop. So this is a stop of this buy, which puts you back in a selling cycle. So I would look for them to try to buy off of 660 or 659. And that would be a great level to get a buy signal off of and take. Now, wherever we get the buy signal, we take it. But these are just kind of backup levels. The last rule is we only trade until 1 o'clock Eastern time. That's because most of the market action happens early in the day and late in the day. You either get opening moves that are very strong and then can produce a lot of volatility, which is what we want to trade, or you get closing moves and you don't want to trade at the close because the theta is so strong and it's just a very risky thing to do. So that's a brief overview of everything, brief 16-minute overview of everything. If you have questions, please ask. I'm here to answer them. We are going to trade the SPY today. That's what we trade in my room. I do give updates on several other stocks on my midday calls in my room. Anything you guys ask for in the room, if you're in a paid subscriber in the room, anything you ask for, I go over. But we also usually go over the Mag 7, Bitcoin, gold, and all that stuff as well. All right, let's get into the comments. Long-winded stuff there. Sorry. Pete Crowley, morning. Welcome to the stream. William, morning. Welcome to the stream. Scruffy, morning. Welcome to the stream. Is it fairly easy? Install the trading view. Yes, it is. That video I showed you earlier, hopefully you saw that. That makes it pretty simple. Williamstown, welcome to the stream. If ES hits the C-Wave 1.0 extension 6571 of 1.2, do you then defer to the C-Wave setup using its 1.2 setup rather than the AB extension? Yeah, so the answer to that is yes, and so let's go over to a different chart. It'll be easier to explain. So you have two different 1.2s on any given impulsive move. Well, I hit the wrong thing there. Let me get this off of here. There we go. All right. So you have two different 1.2s on any move, right? So if this was impulsive, it's not. It's an AB, but or at least potentially an AB. But anyway, if this was impulsive, you'd have this 1.2, right? And you measure the overall move of the market. So that's, you measure from the top to the bottom of this wave to the top of this wave. That gives you your 0 line. And your 2.0 is down here at 6,300. So that's your target. If this was a 1.2, that would be your target for the overall move. Well, wave 3 should also be targeting that area, or the start of wave 3, the 1.2 of wave 3, I should say, should also be targeting that area. So if you do the 1.2 of 3, then that should also give you fibs, which we have right here on the inside. And those target 63.39, about 40 points short of that. Well, remember, this would complete wave 3. Then you'd have wave 4 and 5, which would bring you back into this zone. So you have a lot of confluence on that 6,300 level should they break down. Now we're at the 1.0 here, which is a standard ABC. This is why these levels are so critical right now and why we're watching them so intently, because one, you've hit the 1.0 right here, 65.99 of the move. So that's a typical ABC right there. However, the C wave sets up more for the bigger move down to 6,300, so that's why we have that alternative on there because of this spike right here. Now, it's critical because the 21 moving average is also right in here at 65.70 or so. So the weekly 21 is sitting here for support. The 100-day moving average is sitting here for support. So if they break this level, that should produce a downside waterfall, and then that would target that 6,300 area. This level also has the October low back here that has been a high volume low that we have to break through. So this area is so critical for the bears to beat, because if they do, they're going to waterfall another 200 points. However, if they don't, we'll look at it like this. They'll come down, hit the 21, hold, and then I would look for 7,000 after that. Now, does it have to go to 7,000 if we bounce? No. This can be an A, B, C of A. Then you get a B wave and a C wave down like that. That is also a possibility. So we always wait for setups and structure, and then we kind of make our play off of that. Hopefully that answered your question. That was a long-winded answer. All right, we got about 10 minutes left. Anybody got questions before we get going here? Let me go see where we're at on the charts. We are at okay, we're about flat at the open on the ES, slightly better than that on the NASDAQ. RTY is slightly green. Let's see, are banks going to start green? Yeah, banks are, well, they're flat. SMH is green, slightly. Everything's basically flat. You have a lot of activity late in the day today and after the bell, so it could shape up to be a slow morning. I hope it's not, but it could shape up to be slow. Keep in mind, we have a wide range today. Let's Let's go back over here. Volatility's been high, but from the Mentor Q standpoint, we have the high up here at 667 and the lows all the way down at 652 roughly, and we're at 661. So you have 6 points up and about 9 points down. So it's at 15 points, 150 points of ES range, 15 points of SPY range that the market can trade in today. So we have Fed minutes later in the day. We have NVIDIA after the bell and jobs before the bell tomorrow. So between 2 p.m. today and tomorrow at the open will be critical to what the market does next. Did you go over gold? I didn't. We typically don't go over other stocks on this call, but I've got a few extra minutes, so I will real quick. Let's go to my other chart real quick. Sorry. This is not going to be the chart I want for this. Put this back on the SPY. Let's go to gold. So gold is in one of two places. Obviously, they made their high. They're in an A and B with C down. This is what I would personally like to see. I'm looking to buy around 350 if they get there. If they don't, I'm already long gold. We've been long gold since April of 2024. I had everybody in my group move that could move in their 401k into precious metals at that time because the market risk was high and gold was ready to break out. So I'm already long gold a little bit. We've taken some profit up here. So if they get back to 350 and show a reaction, then I would be looking to buy. And that's another quick tip, guys. If I say 350 is where I'm looking to buy, that doesn't mean when price hits 350, I'm like, get it, go, we're going. It means that I want to see it hit 350. I want it to bounce with some kind of vigor and then maybe pull back and give me a setup, but at least bounce. So the reason I want it to bounce is because I want something to trade off of. So right here's a really nice resistance zone. It's the top of a gap. You can see they consolidated on it on the 3 hour. It's also the 50% retrace. So if they bounce off of here, now I have a place to put my stop. I can enter the trade here, have a minimum target of here, and have a stop here. If I enter right here at 350, well, then I kind of have to make up my stop because there's good support down here. So do I put my stop below this? Because there's also good support right here. I mean, as they go down, how far am I going to allow them to leak before I say, oh, okay, they finally did break all the support and it's no good. But if I let them bounce first off of the level I like, one, that shows that they like the level two, whether it's a small bounce or a big bounce, they at least liked that level to bounce it. And two, it gives me a place to put my stop. So it gives me a little bit of confirmation that there are buyers there. In this case, buyers. It would be sellers on the top. That gives me a little bit of confirmation that there are at least some buyers there. And it gives me a place to put my stop should the buyers fail. Okay. Gold right now, like I said, ABC down towards 350. That would be if the ideal path for me personally because I'm selfish. But they can be in a 1-2 to this side and then be ready to break out. If they break back above this high right here, I'm going to say it's pretty likely they're going to challenge these highs and break through. But I would like to see a little bit more consolidation and pull back out of gold personally. Next targets higher are going to be, if they break out, the next targets higher are going to be, or target higher, target zone, I should say. 413 to 423. And then we'll see what happens there on GLD. And welcome to the stream, Will. George, welcome to the stream. Appreciate it. If you're new and you're wondering what we're doing here, go back and watch the beginning at double speed so you can catch up. We got about 5 minutes to the open, so I got to start getting ready for trading. We are going to be looking for a buy at the open. That doesn't mean we're placing a buy. It means that they are selling right now. And we're looking for reversals. So really great levels to trade off of are going to be your pre-market low, which is down here also at the high volume level. You can see in the pre-market, they still respect, or the post-market here, they still respected that high volume level, came back, respected it again, even though they made a lower low and bounced. So that level is a place I would love to look for a buy signal. I'd like them to go ahead and scare the buyers right here. And don't worry about this buy. It can go away real fast. And we can't take it because it's pre-market. But Coming down here and getting a buy signal in the regular trading hours to confirm this kind of hold of this level would be a great opportunity. But they can also trade off of 660. Just wherever we get the buy signal, I'm telling you where I'd prefer the buy signal. Again, this can go right into a stop at the open, so I wouldn't worry about this buy signal. There are times you miss moves because the buy signal comes in the pre-market and then they go. That happens, guys. You're going to miss moves in trading. You must understand that to be a winning trader, it requires extreme discipline. It's actually a really simple thing to be a winning trader. It really is. If you read it on paper, you would say, this is the simplest thing I've ever read. A third grader could do it. However, when you put it into action, you have to control your nervous system, because when you have real money and real trading involved, as opposed to just reading what's on a paper, your brain kicks in to fear mode, panic mode, your greed mode kicks in, your anger mode kicks in, and you have to erase all of that. You have to be a robot. You have to be a stoic robot and understand that losing any trade is part of trading and isn't a big deal. It's just not. Okay, we got 3 minutes. I'm going to get this buy set up. As of right now, I'm guessing it'll be a little lower, but maybe not. 661 is the excuse me, strike price that I'm sitting on looking for the buy. We'd be looking for calls here in the options market. All right, let me get 661. Real quick, guys. Since if you don't have the indicator and you haven't been able to see the training, we set our stops 50 cents below SPY price. So let's say we got in at exactly 660 for math's sake, and we had a 660 strike. Our stop would be, and for a call, this is for up, our stop would be 659.50. So if we got in exactly 660, our stop would be 659.50. Below that, we're out of the trade. We wait for the next setup, and we go from there. We take our first profit at 20%, and then we kind of go from there. So we close half of our trade at a 20% profit, and then as they come into the next key levels, like let's say we got 20% right here at 662, I would let them run up towards the last week's low pre-market high area before I took my next profit, because this is going to be a heavy resistance zone, so I want to take profit here in case they fail. So I'm looking at key levels. That's another great reason for these key levels, is where to take profit and stuff. So if you come up to this 663, 664 area, you should expect at least a little rejection. So you want to take a profit in case they fully reject. So those kinds of things are important. As price moves up, as we get to be 10% winner, we move our stop up 25 cents. And if all of this is confusing, don't worry. If you get the indicator, we walk through it all the time. But we move our stop up 25 cents. And then if we up 15% profit, we move our stop to break even. So we have a only winning possibility, and we go from there. If you have questions, ask. I'll try to re-explain it in a different way. How many contracts? We trade 50 depending on price. So when volatility gets real high, like a couple of the last 3 or 4 days, we've traded 25. But we're getting ready to open here, so I want to see if we get a buy off the open. If we do, we got to be ready for it. Very, very high option pricing today. We're going to go half size position today, guys, so that's going to be 25 contracts. That's another thing you got to do, is you got to adjust your risk to the market. That's a high volatility market right now, and so options prices are really high, so you don't want to be overexposed on those days, because when they go wrong, it's a lot bigger loss than you're normally incurring. Now, when they go right, your wins are better too, but the cost of that adds up, and if you happen to have a bad week during one of those highly volatile weeks, it can really get you. Okay, there's our buy signal. We're in at 277. God, these are high. 277, and our stop is going to be 660. 30. So that's 9, that's 304. Okay, 660, 30. Ooh, I may get us right away on this one. Volatility. It's great until it isn't. There we go. So we need 304 to move our stop. So we take the buy as soon as it flashes, because we want the best entry possible. And there are times that that entry fails. Like if this fails before and the buy doesn't stay on the screen, it's still chronicled in our trades. We still have it on there. It's a losing trade, and that's the way it goes. That's part of trading. But we want to get the best entry possible, and very often when the buy or sell comes, it comes with a lot of force. And if you wait until it closes, you're going to miss. We have a lot of what I call 1 bar winners, where the market gives us the trade and pays us out all in 1 5-minute bar. Okay, we got stopped right there. 265 was our stop there. 12-cent loser. When the market moves quick, it's actually a benefit there because I put in my trade and then I have to type up the trade. And so the market had already moved up, so our stop is higher than it would have been normally. So it benefits us that we don't take as big of a loss. But anyway, we will move on. Let's go here. Let's see. We were long. Stopped. 265. Okay. Such is life. We will look again here. High volatility days. Usually they're pretty good. I want to trade high volatility days, but the problem is they have such rapid, wide swings. You get stopped out sometimes early on. All right, we are going to run it back here. 2 came back. 279 is our entry, and 279 is our entry, and 660.20 is our stop. We'll try it one more time here. So it was that 279? So it's basically 280 plus 28, 308. Okay. Okay, we're going to move our stops up to 660.45 here. And at 322, we'll move them to break even. Right now, rejecting VWAP in the 21. So these lines on my screen, the red is the 8. That is your momentum indicator. It's the 8 exponential moving average. As long as they are below that, momentum is down. The black is VWAP. That's volume weighted average price. If price is below that, it tends to be more bearish. And the 21 is your trend indicator. As long as they are above or below the 21, the trend is in that direction. In this case, you want the 8 to be lower if you're a bear. Hold on. Okay, so let's move our stops to break even. And at 36, we take our first profit. There we go. Close half for 336. Now we have a 50-cent trailing stop. So we move our stop to 290 here, because they just hit 240 or 340, excuse me. They just hit 340. So we've taken a profit at 336. We have our stop at 290. and we are coming into some resistance here, this resistance shelf here. If they can get through that, then the big resistance is going to be up here at 663. So I'm looking for 663.28 or so, actually probably about 25.15, somewhere in this zone right below it, to take my next profit, because once they get through this shelf, that should be the next area they target. So they're at yesterday's open here. I keep all my key levels on so I can see exactly where we're at. And they shelved that in the pre-market. So this will be a little bit of resistance. I think the main resistance is still up here at the pre-market high, and last week's low. That's going to be a big deal. You know, when you break below a weekly low, they're going to come back and test it. And so they did overnight, and I would expect them to do that in the regular trading hours as well. Usually, when options prices are this high, it does tend to favor the bears. Where's our VIX at? VIX is 23. It's down. If VIX gets over 25, that's a little bit of a red flag there for the bear bulls. Good thing I'm too slow to catch that one. First 15 minutes is nuts. Yeah, but it can be super profitable. You do get on these kind of days where there's a lot of volatility, you do get some wide pullback on these buys. So we got stopped because of that, but I mean we got right back in on the refire and did fine. So it's gonna be a profitable 2 trades here, even though we took a little loss on the first one. This one's going to be a decent winner because of the size of the volatility. You know, 20% of $1 is 20 cents, but 20% of $3 is 60 cents. So that's the great thing about volatility is when the options prices are high, you can rake a lot more money, but also you can lose a lot more money. So, okay, they're rejecting this level so far. Let's see how far back they reject it. Far enough to stop us? I hope not. Guys, if you want the indicator, there is a link down in the description, but it's go to investwithjacob.com and go to the membership plans. I have the tab up right here. I'll pull it up once the trade kind of peters out here. Trying to hang in there. Come on, guys. Push back through. Take us up here and then give us a sell that just rocks the market. We'll take a water slide. Those are the best. All right, well, we're in a fairly safe area. We'll come over here. Investwithjacob.com member plans. Scroll down. In our courses, one of the things you get with the yearly, if you get the yearly today, is you get the price action trade. This tells you how to do price action, understand where support and resistance are, trade them effectively, analyzing the price behavior, all that kind of stuff. It's a really powerful module. It's $67. You get that. You're also getting the bundle, which is $177. So you're spending about $510, and you're getting about $230 in extras there. So check that out if you want the indicator. All right. So typically what you want to see on these, on a move up like this, if you're wanting the bulls to win, you want to see them obviously move through the 3 moving averages we have here to try to start to change the trend. So the trend is starting to curl. You're seeing the 8. You want that above the 21 in VWAP. Instead, right now it's below, so there's weakness still. Once that starts to curl up, you want to see them back test this zone, which we just saw, and then you want to see a new high here, and that'll lead to a squeeze toward this next high up here at the pre-market high. So perfect execution from the bulls, break over a zone, back test it, and push over it. Unless, of course, we're dealing with a failed breakout. Then they do this, and they will come back below this low here. Coming back below that would lead to a failed breakout, which would very likely lead to at least a test of the lows, more likely a break of the lows. Also, you can see at the open, they came right down and tested this put support level, another great level to get a buy signal off of, which we did. So these Mentor Q levels, guys, I can't express how important they are on every chart. You know, we know that at the pre-market high, we have to take some profit. It's slightly below the put support, which is where we would expect a little bit of a rejection anyway, or at least consolidation. So we're going to move our stops up, by the way, to 310. Sorry, let me do the trading first. That's the most important thing. Stops to 310. The reason it's up to 310 is because price hit 360 a second ago on the options. So we have a 50-cent trailing stop. And we'll be getting ready to take some profit here soon. It's probably right in this zone here. It's about 30 cents higher or so. Got to type everything in, get ready so I can have the button click and the message go out to the people as quick as possible. Okay, I'm going to close another half at 365. So another half of remaining. So we closed half. So we started with 25 because we're trading half size. So I closed 12 the first time. This time I closed 7 because I had 13 left. So I closed 7. So I have 6 left right now. So we closed another half at 365. Our stops are still sitting at 310. Should they hit 370, they will move up again. Hopefully you guys are seeing how this works in real time so that we can see the market trade, or the indicator, see the indicator trade the market, and how effectively it is at finding bottoms and tops. Okay, we're going to move our stops to 320. And here's the thing, guys. They can blow right through this level. And if they do, great. We still have contracts for it. But if they fail here, you take such a hit on that loss when you could have had, you're taking a 70-cent hit off the high. It was, 365. Our stops at the time were at 310. So a 55-cent hit on that, which is a big hit when you're coming into a place where you know they're going to do something like they're doing right now, which is reject a little bit. Now they can reject a lot of it here. They can absolutely fail this straight down, or they can come up and tag the put support area. But we don't want to risk not taking this win here because it's a really nice win area. And if they reject, we give up all that money for no reason. If you get to your final target, so let's say your final target was 665. If you get there with all of your contracts, you're making a mistake. You're making a big mistake. While the times that happens is very satisfactory, I'm sure, more often than not, the market doesn't get you to your final target. So if you have all of your contracts and you stop out for a way bigger stop than you do if you've taken profit along the way, if that makes sense. It's hard to do without showing you the math of it on the screen. And remember, losing is so much more powerful than winning. And what do I mean by that? That's an interesting statement just out there for no reason with no context, Jake. If you have $100 and you win 50%, you have a 50% winner, right? So you won 50%, that's 150, right? Everybody with me on that? Now I have 150. If I have a 33% loser, that's 17% less than 50, by the way. Where am I at? I'm back to 100. So I won 50%, I lost 33%, and I'm still in the same place. Losing is so much more powerful than winning. You have to remember that. Losing, that's why stops are so important. Taking profit is important. Oh, I can tell you right now, Will, if you're trying to day trade on your phone and keep up, you better not be doing it on days like this because it just moves too fast. Even on regular days, it's hard. Um, but day trading on your phone is, unless you have something that has quick keys and you know how to use them, I would say that day trading on your phone can be rough. We're up to almost $4. Let's go ahead and call it $4. We're close enough. Stops to 350. Killing it, guys. Nice trade after that short loser. Rebound nicely there. So stops to 350. We'll probably take another portion here at the put support. That's going to be 663.98, so it's about another 50 cents or so up. That's going to be our next profit take if we don't get stopped. So we either take profit at the next level or they stop us out, one of the two. But once you clear a level, which we're trying to do now, then you wait till the next level to take profit. And that's when it's okay, because we already took profit at this level. So it's okay if we get stopped out from here, but when we get to the next level, we need to take profit again. Okay? And one other thing here, guys, while we're waiting, one thing I would encourage you to do is when you do take profit, don't wait until they get to the exact level you're looking at. For instance, if I wait till they get to 664 exactly, they can reject that so hard and fast that I don't get my price that I want. So I'll take it, maybe 663.90 or close, because a lot of times they don't hit the target, they come up just short, or they hit it in reverse so fast that um, we can't get out of the trade at the price we want. So make sure you're not waiting till the exact target to take your profit, because you'll get burned there more often than not. Okay, our stops are going to move to 360. Did they get me on this one? I wanted to take profit there, and they dropped it. Hopefully we don't get stopped here. Go back up and test that high. I got a little greedy there. I was waiting for a little higher. Let's see here. Got 11 cents here. 370. Well, there it goes back up a little. 371. We got a 360 stop. All right, there you go. back test that, and then go back up. Perfect. Ah, while we wait for this trade to continue to play out, some things you can do when you're struggling. One, if you follow the rules of the indicator, we have a 3 strikes and you're out rule. So we say if you trade 3 times, let's say we're trying to get a buy signal, and we get a buy signal and it fails. We get a buy signal and it fails. We get a buy signal and it fails. 3 times in the same direction. It's 3 strikes, you're out, and then we sit on hands for the rest of the day. That's our max. We aren't going to sit and chase the market. It can be super choppy. There's a lot of reasons to get out. One is mentally. Mentally, you need to take a break. So we get out for the day. We'll trade again tomorrow. That's what makes the most sense in all of those cases. If you're having a bad day, get up and take a walk and come back. Take a 10-minute walk. Clear your mind. Don't try to trade again until you've calmed down. It's just going to make you angry and then make you make bad decisions. Okay, we're going to close another half here at 418. And we're going to move our stops to 370. Hopefully you guys are taking the trades along with me and doing well today. We're absolutely killing this open. After a quick 12-cent loser, we have a very, very strong winner here. We're going to move our stops to 380. Oops. Got to type on the other screen. And what we're looking at now, guys, is potential trend day parameters. So we're above the pre-market high. Now what we would look for is a back test of the moving averages here, and then a takeout of whatever high they make here. So if they make the high up here, we got to take out that high. Wherever that high stops and pulls back from, they take that out, and we are very likely in a trend day up. And depending how strong the trend is, you would expect it to be contained by 667.50. We're going to move our stops to 420 because this is absolutely crushing. Once again, guys, you don't see me discount the yearly indicator hardly ever. It's discounted today. You're also getting the price action trading module with it. That's $67. You're getting the Elliott Wave courses if you're not part of my rooms. If you're part of my rooms, you already get those courses, but you don't get the price action trading for free. You get that as well. It's a really, really good deal. Check it out. You can see that I get it. It's one day, it's one trade. That's how it goes. But you can see what we're trying to do. We put support, key level, boom, support. You get the buy signal. Runs it up, straight up off of that. I mean, that's what we're looking for. We're looking for an indicator that can have predictive value of where momentum is ending, where support and resistance are, when the volume picks up, and how to apply all of that at one time without you having to look at 70 charts, without you having to look at 14 volume profiles and time frames and whatever else you look at. It's a all-in-one indicator. It's power-packed. It's consistent, and if you just apply it and use the rules over and over and over again, you'll be a very happy person. All right, I'm going to close another half here at 490. And that leaves me with one contract, just one. And our stops go to 440. So this last contract will just stop out. We won't take any profit on it. We'll just let it run until it's done running because it's a contract. And if it continues to run, why would you take profit? Just let it go. We've done really well on this trade. We're going to be out as a big winner, and we'll let the last contract go as far as it can. Congrats, Jacob. Been watching you a while on YouTube. Thanks, Steve. I appreciate that. Welcome to the stream. Maxime, welcome to the stream. So the day and swing indicator doesn't include access to Discord. It doesn't. And here's why. There's two reasons. One, it's a standalone product. There are a lot of people that don't want to be in Discord and do that. And there are different things that go on in Discord that give you more value, like 401k and different stuff like that. And two is I don't want to sit here in front of a chart every single day with every single person and trade all the time. I love it for now. I'm good. It's not like I'm going away tomorrow, but I do want to step away from this role. And eventually my plan is to make Discord free, allow everybody to stay in Discord and continue that community because there's a lot of great traders and stuff in there that happen. And the indicator is how you get my trading advice without me being around, because it's how I used to trade before we built the indicator, was basically all of the formats that are in the indicator. So it was my way of replacing myself. So yeah, it's two separate products for those reasons. It's kind of at some point a retirement plan, but like I said, for now I'm having a great time. Trading's a lonely game. My kids are little and in school right now, so I have the days just to kind of sit here. Watching trading by yourself is boring if I was going to trade, and watching TV is boring. So having a community of people to trade with and see them improve and get better and educate them on trading and get these stories of people that say, I've never made money in the market, now I'm paying my monthly bills. I've never made money in the market, now I'm a full-time trader. I've had a trader call me, or not call it, send me an email and say, my wife got pregnant. She took maternity leave, and because of you, she never had to go back to work because I learned how to trade. All of that stuff is what makes me happy. And so it gives me a purpose of helping people and a community to lean on. And then when I want to travel more and do more things when my kids aren't tied up in school, I can step away. Totally understand the Discord has some good people, but learned a great deal from you. Thank you, Scruffy. I appreciate that. Thanks, Jacob. Guess what? I missed this one. I keep taking the losers and miss the nice winners. That's because you have to apply it relentlessly. You can't say, "Oh, I don't want to do it. I'm scared." You have to go. It's like I tell my daughter, she's in gymnastics and she's scared to do one of the tricks that she's learning, and I said, you just have to go. That's a foam mat over there. You're going to land and you're going to be okay as long as you follow the rules and do what they tell you. If you do that, you're going to be okay. If you lose a trade, it's just part of trading. By the way, we got to move our stops way up. We're going to move our stops to $5.10. Guys, we have hit a 100% gain on a $2.80 return. Crazy, or priced option. That's crazy. So we are going to move stops to $5.10. Usually high numbers like this, when you get like a $2.70 option price, it means two-way trading. So I would not be shocked to see a strong sell coming from the bull or bears soon. We're kind of in a little bit of a no man's land here, so I would not be shocked to see them get up into this one-day max zone, the 667 to 667.50 area, and then reject from there. That would be, if you had a final target, this should be it. If that's the kind of trader you are, the one-day max. But for me, I'm going to go ahead and let them hurricane. If they can run it, then why wouldn't I collect that money for no risk whatsoever, except giving back a few bucks? Uh, but it's not, to me, it's not a risk because I'm going to make a good amount of money on the trade. So uh, why wouldn't you let it run? Give them a chance, especially when it's one contract. If it was like 100 contracts, I might say something a little different. But is this a new count here on SPY? I have to zoom out and look and see if they've broken. No, I think 6,700 is what they had to hold, and they're right in that zone right now, somewhere around 6,700. I have to look. Um, Here's what I'll tell you guys. Going back to, and Maxime, I'm not picking on you, I promise. I'm just trying to help you, honestly. Um, the folly of amateur traders is they run into some losing scenarios, and then that etches in their mind that that's a losing scenario. It's not a losing scenario. By the way, this is going to be big resistance right here. So that's 6705. So um, this is going to be the area they need to hold, 6713. Um, this should be big resistance, which is also going to be where that 1 day max is, basically. So keep that in mind as you look at this. This bounce is not all that unexpected. But anyway, the folly of amateur traders is they try to cherry pick because they think that this is a bad situation or it's a scary situation, or they try to jump in late after it's been confirmed, or they do all these things that are against the rules. It's really hard to hit buy when the market is careening down, and it's really hard to hit sell when the market is ripping up. But that's what you have to do when the circumstances are right. And that's when the traders who make the most money make the money, because they know where the important levels are. They know where the market's going, and it goes there fast to create emotion. The reason the market sells so fast is fear, first and foremost. But also, the market makers push it that way to create that fear, and then retailers can jump on board. It depends on how it works. So that when the market makers get to the price they want, everybody has jumped on the short train and is ready to ride the short train into the ground. The market makers are setting you up. You get there fast, and then by the time you realize it, it's already rebounded 50 points in the other direction. And that's what you have to know is, where are those levels? How do I trade off of those levels? And then you have to just have the courage to hit buy and sell. And that's not picking on anybody. That is a hard thing to do. It took a long time for me to, I can't tell you when I first started kind of converting into a better trader, how many times I knew where the level was and I couldn't have the courage to push buy or sell because it was too scary looking. And then the market would do exactly what I thought it would do, and I would miss out on a move like this. We got in at about 661. This is a 55-point move on the SPY straight up. 0 red bars, guys. And you miss out on moves like that when the market scares you. And you can't miss out on these moves. If the setup is right, it's a good trade. If the setup is wrong, it's a bad trade. And that's the simple facts of it. If you have a trading plan and it hits your setup criteria and you don't take the trade, that is your fault for not following your trading plan, and you will be a losing trader. And I don't mean that mean. I mean that if you want to get better, that's what you have to do. You have to follow the plan. So sorry, don't take that as any kind of slight. It is simply, I've walked through that fire. I've been you. I've been the guy that said, "Oh, we're supposed to take a buy here," and then we do, and then it doesn't work out, and then it comes back, and they say, "Okay, we're going to reload," and I'm like, "Well, I don't want to reload. We just lost here. Why would we?" And it's because this is the right level. We just had a stop that was just off a little bit. That's all. So once you learn those things, you will be better. I promise. It's scary at first, and now when it says buy, I hit buy, and I can go drink a cup of coffee, come back, my stop's in. Like it is what it is. It doesn't matter to me. I mean, it matters. Of course, I want to win. Of course, I want money. Of course, I want to be successful. But one trade doesn't matter to me. It just doesn't. I know that the system works. I know that what I do works. And I know that if I follow it to a T and leave my emotion and critical thinking out of it, seriously, keep your critical thinking out of it, it'll work just fine. If you are an amateur trader, keep your critical thinking out of the market. You're going to mess it up. That's no joke. I did it all the time. I fashioned myself a quote unquote smart guy, and I said, I'm smarter than these things. And so anytime I'd see something, I'd be like, oh, I got it figured out now. No, you don't. No, you don't. Follow the rules. That's all I tell people. And the people that follow the rules win, and the people that don't sometimes win, but more often than not lose. Holy cowsers, we're at 620. What's 620? 570. Move our stops to 570, guys. Anybody have any fun out there? Hopefully you guys took this trade. I don't know what you're doing here if you're not trading with me. Other than maybe you're just watching because you're bored. But Will, I understand you're on a phone and working. I realize some of you can't, but man, these are the ones. These are the whales that you look for. Got to shrink the screen down. It's so big. It's like Loch Ness coming up here. This is called the Nessie patterns. Yeah, you get the. Let me put a little eye in there. That's your Nessie pattern right there. That's not a real thing. Don't write that down. When do you have position and why? Do you mean as far as when I open the trade, why am I only taking a half position? What's next level for SPY? The next level is the 660. So on the screen here, you can see these zones. They're extremely important. Your call wall is right here at 667. Your one-day max is 667.50. These would be the two levels that I would be watching very, very strongly. I would expect at least a small rejection here, if not a full-on rejection here. The reason, Will, we took a half position today is options prices were 270, and that's a lot of your capital when you're. So it's just a mathematical thing. You want to be trading about 1 to 5% of your account on given days where options are a little higher, and I have to trade 7%. I don't love it, but I do it. But when it's 270, my account's different. I'll tell you right now, my account's different than what we've based everything on because it just is. I just have more than 100 cows. So anyway, but when you are basing this on a 100K account, 5,000 is what you are maxing out at. So we only did 25 contracts, which gave us up to a $2 limit to stay within that 5,000 range. Now that we have built our 100,000 up towards 200,000, we've expanded into 50 contracts, and when it gets up to almost $3, that's too much of of your overall capital to be putting on high volatility days. So there's two reasons. One, they're expensive. Two, the volatility is out of control, so you might get stopped a lot. You just don't want to take those hits if you don't have to. It's unnecessary risk. I keep trailing my stops too tight on the futures market. The trade that I was in with the indicator, the only issue I had trailing too tight. I don't know how to trail correctly. Any tips? How far are you trailing? Like how many points on the futures? Yin carry trade hit the target. Be prepared for selling. Possible. I don't believe in that correlation personally. But this is a selling area regardless, so I would be prepared for some selling. What's our stop at? Our stop has just been hit. Okay, guys, we are out of that trade at 570 was our last take there. We got stopped at 570. I saw my guy go away and I forgot what my stop was at. I had to go look. So we are out of that trade. I'll give you the average exit in just a sec. Got to get some stuff updated. $3.69 average exit on that. A 90-cent winner there. Nice day for that trade. Okay. Let me get that updated over here. One sec, guys. There's a lot going on. I got to update my room. I got to update you guys. I got to type all this in, make sure we're not getting any other stuff going on. The trade was 15 points in the money, and you were 5 away. You were trailing 5 points. Is that what you're saying? So you took a profit of 10 points. I have to do a trailing amount based on options price. So yeah, you can still do it. So you can set a hard stop. You don't have to do a trailing stop. So we trail the stop manually, if that makes sense. I don't put a percentage on it. I just move my stop up each time. Um, so as a percentage, I can't tell you because options prices are all over the place. I don't know. Some days they're 270, some days they're a buck, some days they're 98 cents, some days they're a buck 50. So 25%, I can't. 25% on a $1 is only 25 cents. We have a 50-cent trailing stop. So I don't know that works exactly. And Alejandro, welcome to the stream. I mean, first candle of the day, buy signal, low of the day, straight up green. Got stopped on this little pullback here, but you gotta manage your risk here. They are pushing into our call resistance zone. I would be looking for a sell off of here. Now we do have again trend day parameters. We are above the premium market high. We have not back tested fully yet. While they got close here, that's because the moving averages moved up. So you could technically say they back tested and blew out for a trend day up. And we are hitting the area you would expect them to start to fail. So we'll see how it happens, how it goes. Since we are close to this level, I will look for a sell. However, on trend days, remember we're not trying to trade against the trend very much. So we'll give them one chance for a failed breakout, or to fail. It's not going to be a failed breakout. It's a breakout that just hit resistance. But they're coming into this resistance zone over here. So that is an important area for us to watch here. Cats at home, good morning. Welcome to the stream. Maxime, you got to remember those market internals are poor, but they are poor because they are improving from very poor. So the market opened and went down to negative 400 on the first 15 minutes, and then now has recovered to positive 200. So that's a 600 stock swing in the ADD. The Vold went from negative to positive as well, and you're seeing them, kind of push through these levels. So you got to remember that on a just strict bullish day, gap up and go, everything's awesome. You were looking for like a 1500 ADD near the open, and you want it to stay there, or you want like an 800 that climbs up to 1500 and stays there. But when you're down, you want to just see a strong reversal in the ADD, and that's what we saw. So it's not shocking that on these internals here that you're seeing this rally. And remember, everything is darkest before the dawn. So when market internals are bad and they're hitting support and stuff, that's when they're getting ready to buy and reverse those market internals. You have to have bad market internals to get down there, and then they have to switch to get back up. So now, if this was a continuation day, we've been in 4 weeks of selling basically. If this was a continuation day up, then I would have looked for stronger internals. Fairly impressive from the Bulls here. They have not blinked at any of these resistance levels, and that is you can see the volume down here is pretty. Most of the time, the opening bar is one of your highest volume bars of the day. We've had two higher than that, and all of them up here near it. If we look at yesterday's volume, which was a pretty decent volume day, let's see. Actually, it's fairly okay. It's misleading because the opening bar is so low. It's a weak open, and that's most likely because they're going to trade the afternoon. They want to trade the Fed minutes. They want to trade the volume. Wants to trade the Fed minutes. The volume wants to trade the Nvidia earnings. The volume's going to want to trade the jobs number. So you're getting lighter volume here, um, because of that. Because there's the people want to trade the catalysts. I joined late. Thoughts on Nvidia? That's a bigger conversation than this call. Uh, we may have a short coming up here soon, so I don't want to jump over there just yet. The beauty of this setup, though, is if it is a sell here, it has a very, very serious potential to go down and break the lows, based on overall structure. If it fails, then obviously that's not going to be the case. But the overall potential here is good. And given the volatility, that kind of volatility usually means two-way trading. If you were just going to have a bull run, volatility wouldn't be so high. So I do think there's some selling coming here at some point. That's why I'm interested in seeing what the first sell looks like. It's off of a great level. You can see they're rejecting the area I said they should reject. So let's see if they can follow through to the downside. As of right now, I'm sitting on the devil number 666 as a potential put. That may be adjusted because that was a fairly strong bull run. So it sometimes can take a bar or two to get the sales cycle started, or weakness in the bull market, I should say, is what we would be looking for. Okay, put 660. Yeah, okay. We're all set up there. We'll see what we get here. Even a back test of the 8 here would be probably a win if they gave us a sell right now. It's got to come in like now. But that should be a win if they did that. Let's go. I would not be shocked. Actually, today, I wouldn't be shocked if Fed minutes, they can't, sometimes they are lackluster and you don't get much out of them, but they priced in a lot of volatility today. So I would not be shocked to see the Fed minutes cause a sell that goes down and hits the 21 weekly, which is just below kind of where we are right now, or the low from today. Be about 657 or 6, somewhere in there. Goes down and hits that, and then NVIDIA earnings rallies the market. I would not be shocked by that one bit. I do think, I have said in my room, I do think 7,000 is inevitable. Even with this pullback, I don't think it's off the table at all yet. It can be. I mean, the bears can seal the deal on that, but that's a ways to go before that happens. But I think 7,000 is inevitable, and you have next week is a holiday week. You have Christmas coming. The back half of November and December are typically bullish, and I would expect and be looking for a tag of the 21 weekly today, and then a rally off NVIDIA earnings. NVIDIA earnings will be good. They're sold out. The reaction. Yeah, I mean, I don't think anybody's expecting NVIDIA to miss, but if you look at their last, I think, 4 or 5 earnings, they've actually sold a little bit off of earnings. I think this one could be different. They are rebounding off a key level. That 180 level is a strong level, but we'll see where they're at the end of the day. You know, we're getting ready to come into a potential sell here, so I don't want to switch charts. But yeah, they are. They have been a little weaker off of earnings the last few times. So we'll see. The end of the day, I think, matters more than where we are now. They're up 3% right now. $669.39 is the target for a SPY reaction lower if it gets there. It's an interesting number. I mean, I guess you're going off this area here. I have to go further back, maybe. Yeah, I mean, I don't know. I think the 6,700 number was the call wall, and where I would expect them to. It's also the 618 fib that I would expect them to retrace to. So 6,700, they just tagged. They were just slightly above on the ES, but that's where I was kind of expecting this to go, especially considering you have the call wall and the 1-day max here. I mean, going back up to the open at 669.70, I would get the 669.39. Maybe it's a fib or something. I don't know. I'm not sure about that level. I'm not saying it's wrong, by the way. I'm sure you have a way you came up with that. Just what I see on the chart. Coming back into the 8, you would expect them to give like they're doing now. When I say a bounce, guys, I don't mean that they're going to bounce it and go back higher. I mean that they're going to not just blow through this number on the candle. They can, but more often than not, you're going to see what you're seeing. They come down near it. They do this. They'll probably tag it. Do this. They'll mess around with it for a minute before they break through, unless this is going to be strong selling, and then sometimes you see them just whack it. But um, this is not uncommon market behavior to see them come down, test the 8. Now, getting through the 8, then we're very likely coming back down here to 664.37 to test VWAP in the 21 and see what happens there. Breaking back below those likely leads us back down here to 660. While we wait here, guys, something I want to highlight that happens a lot is we just trust, and I get it, you're listening to me, but we just trust people who say things as if they're smart or they have some sort of quote unquote insight as to why the market's moving the way it is based on news cycles. There are a lot of people who know why the market's moving the way it is based on the technical factors, which I'm 100% believer in, and I can show you lots of examples of that and disprove the news cycle over and over again. But they come on, they have to have reasons for things, otherwise they can't have TV. So they come on the TV and they tell you why the market's rallying or why the market's crashing, and almost always it makes me laugh. And one of them, I know they're talking about it again recently when we had the 10% crash, was the yen carry trade. And they came on and said, yeah, it's because of yen carry that we're crashing. But if you actually look at the data on that, there's no correlation whatsoever. And the last 3 times the yen has dropped significantly, like it did then, 2 of those times the S&P actually rallied very strongly. And then the one time we dropped 10% happened to just be coincidence, and so they blamed it on the yen carry trade. And now everybody's really following the yen and how it works with the U.S. market. And I want to caution you against those things. I think they are horrible, misleading. What's the word I'm looking for? Misleading is probably the most inaccurate ways of describing the market there can be. If you actually look at correlative data of things, you can see that each chart on its own basically can do its own thing at any given time. Now, do the ES and the S&P trade in step the ES and the NQ trade in step most of the time? Yeah, there's a correlation there because the ES might as well be NQ too. Like 40% of the ES is now made up of NQ assets, or 40% of the weight of the ES. So that's why they trade so closely, because those heavyweight stocks are in both, controlling on both sides. So don't just listen to the news cycle and assume that what those guys say on TV means anything at all, because I watch CNBC about once or twice a week, and I just laugh at some of the reasons they give for things. Some of the guys on there are smart; they know what they're talking about. But some of the guys, I don't even know how they get to be on TV in this industry saying what they say. So just remember that just because they say it on TV or CNBC doesn't mean it's a fact. It just means they need some reason to make you feel good or bad about the market. Because if they can't explain it, that's my favorite, is when they don't understand that Nvidia came out today and beat on the top and bottom line, forecasted superior next year, highest growth rate in history, whatever you want to say, and then the market goes, the Nvidia goes down 6%. They have to find something. They'll be like, oh yeah, the guy at Nvidia said that they might have a week of no chips or something. I don't know. I'm making that up, but you get the idea of they have to grasp at straws to find a reason that it happened instead of just looking at the support and resistance. You know, the people in my room know that when we do earnings calls, they want to see those stocks on the afternoon call for earnings, and all we do, I have no idea what they're going to report. I don't care what they're going to report. I tell them exactly where the levels are and what will happen at those levels. And if they are at good trade setups, we are almost always right on the earnings. If they're at bad trade setups, we are, I caution them and say, this is not one I want to be a part of. Here's what can happen on the upside. Here's what can happen on the downside. But if it is in a setup that I believe in, a bullish or bearish setup, you can almost always predict, regardless of what the call is, that what the stock's going to do. Mute CNBC. Sometimes it's entertaining. I like to hear what they say sometimes, because it's a funny world we live in sometimes with these. And I'm not here to claim I know everything, guys. I know I make mistakes. I know I don't know everything. I know in the big scheme of finance, I probably know very little. When you're talking about every single thing that goes into derivatives and bonds and all the stuff I don't mess with, in the big scheme of things, I know very little. But as far as analysis of charts goes, I feel pretty confident in what I do. And I am an evidence-based person. So you have to show me that what you're saying works or is true. And if I can show you 100 times the opposite and you can show me one instance of the positive, it's hard for me to believe in you. No, but this one time it happened. Right. Yeah, but the other 99 you lost, or it was wrong, or it was this. You can't just decide it fits because it fits that day. It's very political of them. Good news is bad news is my favorite, or bad news is good news. Those are my favorite lines. Anything to justify. Okay, let's go. 214 at 666. Our stop is going to be 667.40. I don't think I got that stop right. Hold on, guys. Sorry, 666.60 on the stop. My bad, guys. I was looking at something completely different. I don't know how I got that number. 666, all sixes there. Okay, we're at the 8. They got to get through the 8 here for us to succeed. If they get down through the 8, we should come on down here to 664.54, and that would be likely a winner here. But they got to get through the 8 first. So this is showing weakness. We are trying to get short here. Remember, we do have potential trend day stuff here, so failing here would not be shocking at all. They did come into the one-day max, which generally holds, so we should be looking for a little bit of follow-through out of the bears. But they have rejected it. They can consolidate here for a long time, then go higher. I mean, they can do a lot of things. I just want you to be aware of what the parameters of the market are right now. Right now, the bulls are in control. We're in a buying cycle that is weakening. That's why we get a sell signal. However, we are in trend day because they did get above the pre-market high, and We haven't confirmed the trend day yet. Any new high would confirm a trend day. Okay, we are at 214, so it's 21 cents basically, which is 35. So at 235, we'll move our stop. Snake oil analysis. That's right, Jack. It is snake oil analysis. Jerks. They poked the 8. Couldn't get through it so far. We'll see if they have any more juice here. Remember, guys, these discounts on the indicator go away at the end of the live stream. So if you're thinking about it, make sure you get in, because if we fail this particular trade and they make a new high, that will be a trend day. And at that point, we won't be trading the rest of the day. So the stream will end. But if they sell, then game on. CNBC is just a bunch of talking heads, mostly talking out their asses. I can't disagree too much with that. Isn't it easier to figure out if we are in a correction if the first wave is 5 waves down? No. So typically corrective waves are 3 waves, and the first wave is an A wave, which more commonly is a 3 wave wave, but can be a 5 waves. You can have a 5 wave A wave. That's a lot of wave talk, by the way. Tubular. But typically your 3 wave structure on corrective moves. So you're on the opposite side. A 5 wave structure is impulsive, which as we are in a bull market, you would look for that more on the upside, and downside you'd look for 3. But the complication of all of that is that we are in diagonals, and diagonals are all 3 wave moves and super annoying and super complicated and really, really hard to chart, honestly. They're very challenging because they really don't have rules. They do, but not as good ones as you want. They're not as clean, and it makes it tougher. And welcome to the stream. I'm going to try to say it Mithupan. I hope I got that right. But the indicator is awesome. You're right, Otis. It is awesome. And we are at a point where we can move our stops down to 666.35. At 46, we get to move them again to break even. We're at 240 right now. Almost there. They're through the 8. That's a good thing, especially if they close this. Right there. Okay, now keep it down. Get off my lawn. Those are all things old men say. Keep it down. Is it just my connection cutting out? I don't know, Will. I hope not. Or I hope so. I hope everybody's not getting a cutout connection right now. We're trying to make a trade. Trying to win some money here. Shouldn't say win some money. Although it is technically quote unquote gambling. I don't see it that way. And winning money sounds like gambling. Trying to make some money here. There you go. How's that? All right, we get to move our stops to break even. Our first take is going to be 42 cents. So that's 56. 56. We get to 256. We get to take some money off the table. But we're in a risk-free trade, so nothing can hurt us now. So close, guys. Come on. A little further. Just get to yesterday's high. That'll do it. Once we put the money in the bank, that's a good thing. Then we can just sit back and relax. 6 cents. Come on. Don't do that. Even emotionless. I cheer for the bars. I'm so weird. You know, it's like watching a Kentucky play basketball, which has been miserable lately. All right, there we go. Close half for 256. I cheer for it to go my way, and when it doesn't, it's frustrating, but, it's just another day. All right, we're going to. Okay, we're good on stops right now. So right now we're going to keep our stops at 214. We are closed half at 256. That's another winner. Winner. Lobster dinner. Chicken's for stupid people. I'm just kidding. I love chicken. But lobster's better. All right. Day trade alerts. There we go. Everybody has been updated. Now let's just go ahead and cliff dive here, guys. Steven, your connection's cutting out also? Gosh darn it. Let me go look at my back end here. It says I have an excellent connection. Hopefully you guys are getting the stream mostly uninterrupted. I don't know what the issue would be. Guys, we're making money. Don't forget to like the video. You can comment if you want. Share the video. Tell your friends about it. Be the hero. Be the hero that introduces them to trading the right way. Well, a way. I think it's the right way, but that's because I'm doing it. I might be biased. Martin, welcome to the stream. Strong stream on your end. That's what I want to hear. Stream is clear for George. Okay, perfect. Maybe you guys are just in a bad internet area. Joe Rapp, welcome to the stream. I know you type in Joseph. You probably want Joseph. So Joseph Rapp, welcome to the stream. Jack says it gets choppy when enough people log in. We'll get more people on here. Let's get it choppier. Guys, I want to, since we have some time here and we're just kind of waiting for the market to go ahead and crash, which would be great since we're short now. If you saw my reel about banks, first of all, if you didn't see my reel about banks, you should go watch it. It's really, really important to understand what's going on in the banking industry, and it's not good. And if you saw that, I do want to clarify a couple things because I know a lot of people had questions about that. And sorry, I happened to look at the banks. So banks and transports are flat. They're not really buying into this rally. So that's an interesting development there. But banks have issues that are huge, and some people asked, is my money safe in a bank? Blah blah blah. And I don't mean blah 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 like those aren't important questions. I just don't want to repeat all the questions. So let me just give a quick synopsis of that. The bigger banks are more exposed than people realize. Bank of America, J.P. Morgan, all these bigger banks are very exposed to very risky things. They're very exposed to the auto industry, which is failing at the highest rate in history, and Tricolor just went out of business. They are very exposed in the credit card industry, which is failing at the highest rates in history. They are very exposed in shadow lending, which is a $5 trillion business that no one knows anything about. There's no regulation on it. It's completely non-transparent. It's a mess, to be quite honest with you. They have a liquidity crisis in banks. They're borrowing from the repo fund, which is a fund banks need to borrow from, sometimes for just operational things. Sometimes there's reasons for them to borrow that isn't bad, but $50 billion came out of that fund, followed by $20 billion. and it's more that those are liquidity things, and you have banks hoarding cash now because they're worried about liquidity. So that liquidity is not coming into the market, and if they can't get the funds they need to operate, they will go under, and so that creates a crisis because the Fed's stuck between a rock and the hard place on if they lower rates, it messes with inflation, which is still here and sticky, which I told you a long time ago was the case. And if they raise rates, it messes with employment, which is a problem. So they're in stagflation. So when all of these things come together and the banks have to start paying these debts on their mortgage sheets starting next year, or on their debt sheets, I should say, that creates a problem in banking, and that creates a very, very big problem. And right now, we are in a worse financial spot than we were in 2007, right before the great financial crisis, because housing was the only indicator that failed. Right now, you have auto loans, you have credit card, you have commercial mortgages, you have shadow lending, and housing is back on the rise. It's not where it was in 2008, but you have four major things and a fifth one on the rise. So we're going to move our stops to 220. A little quick break here. And then we are going to close another half here at 280 as we are approaching major support. Sorry, guys, one sec. Stops to 230. We are at the VWAP and 21. You've seen it bounce off of it already. That's why we took profit. We'll see if they can press down through those, but we don't want to get stopped out and miss on that $2.80 win when and have to take a 220 win. That's a 60-cent kill on that. So FYI on that. All right. So with that, people are asking, is my money safe in these banks? I do think you're going to see major banks go under. I know that credit unions and regional banks are much stronger because they're not exposed nearly as much to those things. Credit unions specifically, that's where I will have my money and will have my money. Even if I'm getting a slightly better interest rate at a bigger bank, I don't, and they have more branches, whatever, that's not important to me. Right now, safety is, and risk. Your money is insured by the FDIC. That is true. There are a couple things about that, though. One, the FDIC is generally meant for here and there failures, if that makes sense. Like, 3 banks went under in 2023. That was a lot they had to insure there, but it's not necessarily there for a global crisis. And while the government should pay you what you're insured for, if they can't, they either have to say sorry or print more money. And I can tell you that printing of money will be the death cross of what's going on financially and of the economy, because it will liquidate the dollar down to no value. It will put us in a very weak financial position overall. It will be a major blow to the markets. Major. I've said for a long time, banks should lead us down. Stops to 250. I make myself laugh. I think of a reel where this kid's walking through the neighborhood and he's acting like he's a gangster. And then all of a sudden he sees this guy. He's like, oh, hey, what up, Phil? And then he goes back to being a gangster, and it cracks me up. I'm in mid-rant there about the banks, and I have to move our stops. And I think that's going to be a major impact to the global financial strength, especially the U.S.'s. It's going to create a lot of issues. Personally, that's a opinion. Do not write that down as fact. Do not go out and do something crazy because of that. Don't take $500,000 and stick it in your mattress. Be smart. Wait. You'll start to see the cracks more and more. I do believe there will be a day we wake up and the circuit breakers get tripped and people are backpedaling pretty quickly. I don't know that we're there quite yet. The banks still have until next year to before all of this really starts coming to a head, but we're pretty close to next year. So, um, just to give you some background on that, if you didn't watch that reel, you should go watch it. Like I said, it's full of good information. We're going to go to 260 on our stops. All right, guys, we're going to move our stops to 280. Man, these guys are killing it for us. So now we have a failed breakout. We're back below VWAP and the 21 strongly. They're blowing through put support here. Um, the pre-market high is probably going to be my next profit zone. We did just spike through support, but I'm kind of being a little greedy here because I feel like this is should be a bigger breakdown. I feel like they should be coming down to hit the 21 weekly here. But we're not going to be crazy, but I am going to let them extend a little bit past this support level because, well, I just am. You can always take profit as you see fit. When I have a winning day, I tend to want to err a little more aggressively. So I have a nice big winner here, and I have a nice big winner happening here. So I want to err a little aggressively to see if I can get a bigger breakdown and maximize my profit taking. And if I don't, as much as that stinks that I didn't take some profit here, it's still a great day. And if they do break down, like I think, then it can be an exponential day. So be more conservative when you're losing, be more aggressive when you're winning. What's your P&L today? This week has been an effing monster. It's pretty good. Monday was 8,000 roughly. I was 8,100, but before, and then fees and stuff, but roughly 8,000. And today's, over 3 right now. We're doing half trades today though, so it would be, over 6 if we were doing full size trades, but the volatility was a little high. So half size trades today. I was happy to see that reel show up on Facebook on the banks. Thanks. I try to keep everybody as informed as possible on things without giving away too much of my room. If you've been in my room, and I don't know if you have or haven't, you know that I've been talking about the banks since like last June. It's been a while, and how much pressure they're under. Stops to, let's go to 330, and we're going to take profit here at 375. You guys have any fun out there? I hope so. This is a good day. A lot of fun when you get this kind of volatility. It's pretty awesome. Where 50-point moves are just the standard, and you have an indicator that tells you when they're going to happen. That's a pretty good thing to have, in my opinion. So if you don't have it, guys, check out those discounts. 10% off the yearly. You're getting the price action trading module, which is $67. You're getting advanced and basic Elliott wave. with that. And then if you just want to try it out, 30% off the monthly for your first month. That's for your first year, 10% off, and then it's normal price after that, and 30% off your first month. Again, those go away after the live stream, so make sure you take advantage of those offers as they will not be here tomorrow. Mihai, great day. Yes, it is. Welcome to the stream. Jack Barnes, I don't trade options, but it's been epic to watch the indicator crushing. Those tweaks you made seem to be working magic. Yeah, I mean, we feel pretty good about it. We've made some small adjustments, and I think it's really helped us a lot, both on the back end of the indicator and the front end with our stops. It's helped us a lot. Let's see, that was 410, so we're at 360 on our stops now. Got to pay attention. Internals are falling quickly. They're now about down to the opening levels, basically at negative 382. You're seeing the Dow has turned red. The transports have turned red. The banks have turned red. RTY is close to closing into red. So Meta can't get out of its own way, down another 1.5% today. Microsoft falling off of its level that we talked about. If you've been in my room, you know that this is expected from Meta and Microsoft. Netflix, all of them are in some tough spots. Let's see where Bitcoin's at. Oh boy. Oh boy. Bitcoin's in an interesting spot, that's for sure. They're getting down to some serious levels, and the waterfall will take effect. 84 is next on Bitcoin if they break 88. And then you may see a bounce there, but I think ultimately 75 is going to never use the word definitely, is likely to get hit if they break 88 overall. And then I think 50 would be my target, 55 actually. But at 75, they can definitely buy there and push. So don't just assume 50's coming. 75, 84, 75, 55 are the next three major levels. They can move around in between those two levels, but those are the major levels. Stops to 380, guys. Another freaking monster. This is as good as Michigan beating Ohio State. I would argue it's as good as anyone beating Ohio State. No offense if you're an Ohio State fan, but you're probably smug. I'm just kidding. People probably think I'm a smug Kentucky fan, but it comes with the territory of winning, I guess. Basketball, anyway. We don't win in football. That's stupid. I would love to win in football. I hate that we're not any good at football whatsoever. Playing cat and mouse with the stop. Oh, you're in the you're in the futures. It's a little different over there. I would say if you're winning, expand your stop a little bit. Keep it what makes sense for your risk tolerance. Oh man, they just got me there. Those bastards. Oh, that's weak sauce. Okay, well, stopped at 380 there. Another monster trade. I think this has more legs to the downside, but we'll see. I mean, they can make a higher low here for sure. If they were going to do that, I thought they would have done it off the pre-market high, but they could spike and reverse here. But I think lower is more likely. Stopped 380. 1 second here, guys. Let me get everybody updated. All right, our average exit on that one is 292. 1 second here so I can get all of this. All right. All updated here. Almost a $4,000 day, so that's pretty good. Trading 25 contracts today because of the high volatility prices. Normally we're trading 50, but 25, almost 4 grand. Not a bad deal. They got you. They got us too, Alejandro, but that's okay. Still a great trading day. Absolutely. Dollar got over $1 today. Sonny, welcome to the stream. Do you feel ES is trading in a downtrend channel? It just reversed from the top of the channel yesterday. It reversed from the bottom of the channel. Yeah, if you look at the pattern, I said 7,000 was where we needed to hold, or 67.13, I should say. They came basically right to that level and pushed back down. So doing everything it's supposed to do to continue in the downward direction. This is not uncommon in a C wave or a impulsive wave to hit the 1.0, which we did at 65.99, come back, test the 618. Now you'd look for it to break down towards 64.85 to 64.14, depending on how strong this down move is. Now we may peter out at the 1236 here at about 55.30. That gets us into a common C wave extension. So 1236 is a common C wave extension, and also it would hit the 21 weekly, which I expect them to bounce off of. If not today, maybe with NVIDIA earnings, maybe tomorrow, maybe Friday. But I do expect them to close the week above that. It's not typical to blow through that the first time you get to it. So they can. I mean, don't get me wrong, they've done that before, but typically they don't. Great day, Jacob. When volatility slows down, I'm right with you. Problem is volatility is the best time to trade. That's the best. Because you get these 50-point moves in volatility, and that's what you really want to see. Is the moves that pay you the whales figures. VIX has not improved much on this move down, so that's interesting. Maybe it has. I looked at it a lot earlier. Let's see what the VIX is doing real quick. Oh yeah, it's improved quite a bit. My bad. I looked at it when it was like up here somewhere. So it has improved. It fell off a cliff, came back, and now it's going to be battling. 25, again, guys, is a key number on the VIX. Above that, volatility is high, and you should expect the bears to kind of be in control for at least the short term. Oof. They lost their pre-market low here. Interesting on Bitcoin. We got a minute. You guys wanted to talk about NVIDIA. Let's go to a different chart for that. Told you there was more downside coming. These sons of bees with that little tiny bounce. Dang it. Still a good day. Still a good day. Still a good day. So NVIDIA, we had this major support zone here at 185. They also had 180 right here. I don't know why I took that one off. I had it. Roughly. It's 180, right? Close enough. You see they came down, spiked. It's touched it, spiked it, and technically if I move this down to where it's supposed to be at 180 right there, trying to hold this level. Now, to me, the setup here is down. Now, here is the issue. You have two competing things. You have A, B, and then C should come down a little lower into this support or even 164 with the considering the size of the option move. 164 would be where I'd look for this kind of bounce. Maybe not to all-time highs, but a bounce. However, what you also have is you have a potential for this to be all of wave 3, all of wave 4, wave 5, and then this wave 4 corrective depth theory, and then they're back up. So those are your two kind of competing narratives. They did hold support so far, but they have not. I mean, it's tough. This is a tough one to here's what I'll say. If they get down to the 21 on the ES today, I would expect NVIDIA earnings to bounce. If we are not at the 21, I could see some kind of move that goes like this. But that's going to be closer to the end of the day. I will have a better opinion, or at least a different opinion. Maybe during our midday call or our closing call, if you guys are in my rooms, we can go through that. But right now, this looks like an incomplete move down, where I would expect him to at least hit. Yeah, this 166, 164 zone. That's where it's targeting, and that's exactly. Let's see, that's 20 points down, so that's about 10% down, and I think they're expecting 7 to 8% on the move. So that's what I would look for on NVIDIA personally. It's not one that the problem with a stock like NVIDIA is if you play their options, one, they're going to be expensive, and two, if you're wrong, the other direction is going to eviscerate you. So I would probably not want to be involved here unless we're at the 20 on the ES and NVIDIA has broken this low, then maybe. But I'm not. To me, this favors the downside, and I don't like betting against NVIDIA in general. So I would not want to necessarily be involved. But that's my 2 cents, is that if they close or get below 180, which certainly isn't impossible, NVIDIA moves quite a bit in a day, or can move quite a bit in a day, that still favors the downside to me. A weak candle today, I don't know. I favor the downside. That's my 2 cents. I favor the downside. But it's certainly not a slam dunk. It's not one that I'm like, this is the pattern we're looking for. Hi, Jacob. For pre-market highs and pre-market lows, do you look back as far as the previous day's closing price action or the hour before the market on the day? Well, you look at this. We're on Bitcoin here. SPY. You just look at the pre-market. So you have this yellow and this blue right here. So this is yesterday. And they closed down here. Your pre-market low is right here, 658.68. I'll explain why the pre-market low is higher on here in a second, but this is your actual pre-market low, and your pre-market high is right here at 663.37, and those are your so I have it lined off here with my tool. Now the problem is this key levels tool only looks at the quote unquote true pre-market, which is the yellow, when the actual true range is the blue and the yellow. So the true range is from down here to up here, and that's what you're looking for when you're looking for a trend day. Now, we never got a trend day here because we broke over the pre-market high, right? But we never pulled back and back tested, and when we did, we failed. So what they needed to do to confirm this as a trend day is they needed to back test any of these levels here or here, back test, find their support, and do that, and then it's a trend day. But they never back tested. They just went straight up and then broke straight down. So, yeah, it's um, the full range of the overnight trading. That stop out hurt. Yeah, I mean, you never like to see it, but you gotta play risk reward the way you play it. And I always say you never play results based trading, and that comes from poker actually. I'm an avid poker player, and I like mathematical things. And to me, poker's math. Anyway, you never play results based, so you never get dealt the hand 2-7 offsuit, which is the worst hand you can get in poker. Fold it, and then the flop comes out, and you know the bet was $200, whatever the bet was, and then the flop comes out 2-7 or 7-7-7 or something like that, and then you say, "Oh my God, next time I need to play 2-7." No, you don't. That happens once in a blue moon. Shit happens. You don't look at the results and say, "I should have done X." You play your system the way you play it. You play the odds because those are the things most statistically likely to happen. Again, would you rather be the casino or would you rather be the gambler? If you don't say casino, you don't understand how this works. The casino wins, period. Do they have days where they pay out $1 million jackpot? Yes. Is that hurt? Yes, that kills them. But they spent so many days collecting more than $1 million that it doesn't hurt them bad enough to close them down. It's just a painful payout that they have to endure because that's part of being a casino. You have to let people win a little bit or they'll never come back. So you have to have the casino's mentality of this is a long-term business that I am going to win over time. If you're trying to get rich quick, you are the gambler. If you are trying to bet more than half of your stake, more than 5% of your stake, you are the gambler. If you are trading random trades because you're bored or mad or tired or sad or whatever, you are the gambler. Be the casino. Be the guy that sits over there and goes, "Oh, 16, you want to hit that?" And then you have to make the decision because you're the gambler. Because that's what happens. You get in with all of your money, right? So you get in with all of your money right here, and then they start coming back to here, and now you have 16. Do you want to hit? Because if you fold right here and they do this, you're sad. If you don't fold right here and they do this, you're sad. So you have to play it exactly right and get lucky enough to hold on 16 and get a 5 or whatever, and you have to make that decision against the dealer's 10, and it sucks. So can you tell I like to gamble and grow and spend a lot of time in Vegas? You want to be the casino. Be the house. That's where you want to be. That's the only advice I would give to any trader. If they say, what do you wish you knew back then that you know now? And I'd say, be the casino. Be the one on the winning side of the stats. Don't bet against the stats. I had a saying, playing poker, never post-mortem hand, play the rules exactly right. ADD still poor? Yeah, it's under the open. So it opened at negative 400 roughly. It's now at negative 479 after going to positive almost 400. So it went from negative 400 to positive 380 or so, and now it's back at negative 480. So it's dropped off a cliff here. Volt is also turned red and down. We are in a sell cycle, but the NQ just got there. So this bar would have to close first before we get any kind of buy cycle. So I'll be right back. All right. I'm back. Are we looking for a call? Yeah, we would be looking for a call, but like I said, this bar has to close first, and it has to close. That should be okay. I mean, unless it's a really, really strong green bar here in the last minute and a half, or almost 2 minutes. NASDAQ should close in a sell cycle on this bar, and then that's when you start to look for a buy signal. That doesn't mean you're going to get one. You could get 10 straight sell bars here and keep going. But now what the market is looking for, what the indicator is looking for, is it's starting to look for support levels, volume levels, and momentum weakening. Right now we are in a sell cycle. And as long as it stays strong to the downside, the indicator is going to say we're in a sell, there's nothing to talk about. Once they get to a level, maybe this put support level, maybe this low right here, same basic area. Once they get to a level where there's volume and there's buying and there's a slowdown, then it's starting to look at weakness. And once it gets the criteria met for weakness, it issues a buy signal. Now, when it issues that buy signal, you are still in a selling cycle. This is still in a selling cycle. It's just telling you that that cycle has shown weakness, the momentum is dying, and we are at a place where the market should reverse. So if we see weakness, the market should reverse. The bulls should be able to step in and buy. So it issues a buy signal telling you that, one, we should look for a minimum bounce of 7 to 10 ES points. That's what we're looking for. That gives us our 20% win. That's why we take that 20% win. And it's also looking for potential. So it's looking for 7 to 10. If it thinks you got a 7 to 10 point move coming, it will issue that signal. And if it thinks it's better than that, it still will issue the signal, obviously. But what I'm saying is it's looking for a minimum of 7 to 10 points, which roughly would give you the 20% win. And from there, see what happens at their next resistance zone. So just because you get a buy signal doesn't mean we're in a buy cycle. It means that the sell cycle is weakening, and it's a good place to get in. It's how we find bottoms and how we find tops. And I think if you look today, we found the exact bottom. I mean, I understand that the buy signal didn't come in at the tick of the low, but the bar of the low, we got the buy signal. And while we didn't get the exact high, we were just a few bars off of it, and there wasn't much of a fall off before we got it, and we got most of this move all the way down. So now we should start looking for a buy signal here. We're at yesterday's open. There's also this support shelf right here that they had to get through on the way up. So we'll see if they can make a higher low here. I will also say if they make a higher low and a higher high, then I would favor the upside on NVIDIA, depending on the close of the day, of course. Because we still have the minutes at 2, and the minutes can either be kind of a nothing burger, a lot of times they are, or they can be explosive. So we never know what we're getting with the Fed, and if they're explosive to the downside, those are things to consider when looking at the NVIDIA earnings. So the structure of today, I'm saying on the smaller time frames, if it's bullish, I might favor the upside for NVIDIA. Doing a victory lap. Yeah, today is a good day. Monday was a good day. Yesterday, there wasn't much trading yesterday. Hi, Min Sun. Hi, Jacob. Hi. Hi. I think it's hi. Sorry. Welcome to the stream. Dollar broke today's high. Oh, there you go. Dollar's breaking out. Is market going to go lower? So my view on higher and lower in the market is different, I guess, maybe than most. I don't want to tell you that the market is going lower today because I don't know. No one does. The setup for me is that they should go lower to tag the weekly 21, which is going to be, we can go look we might get a buy signal here. It's going to be around 65.70 on the ES, roughly. So if we get that, that means they would have to go lower today. But I work off of support and resistance. I'm not working off of, do I have a feeling the market's going to go lower, or where are we at? We're not at a place. We've basically been at support. So let's go back over here and put this on ES. So if you look, the market has built a shelf down here on the 3-hour chart at around 66.23. If they break that, then yeah, I think we're definitely on our way down to um, the 21 weekly moving average. And what I will say is, as long as we're below this high right here, 6709, the bears are in control of the market. We get it back above this high, and the bulls have a chance to either give us a B wave back up or all time highs, and I would favor all time highs personally. But as long as we're below 6713, the bulls are still in control. I'm sorry, excuse me. The bears are still in control. But saying right now, is the market going to go lower, isn't helpful because this isn't a trading zone. I'm looking for trades. I'm looking for levels to trade off of. So I don't pontificate on, that's a big word. I don't know if I could even spell it, on the market going higher or lower. I look at support and resistance and say this is a great place to trade or it isn't. And more importantly, I've simplified 20 years of trading into a device that tells you when the market's going up or down. You're seeing it on the screen now. And you get 10% off on the yearly, as well as the price action module. You get Elliott Wave Advanced and Elliott Wave Beginners as well, or you can get 30% off of the first month and try it for yourself. It's also great on swing trading. If you didn't see yesterday's overnight video, you can see the 3 trades we had on Microsoft this year were absolute monsters. I mean, just destroyers. 42% on the buy on Microsoft straight up. There was one red doji in all of those weeks on that up run of Microsoft. So that's what you have to understand on those kind of trades is, yeah, you're going to take some losses on swing trades just like you are on day trades, but the indicator finds those whales quite often. You know, it did it on Google, it did it on Microsoft, it did it on Bitcoin, it did it on Nvidia, it did it on Apple. I mean, it's done it in so many places where you find those absolute incredible monster moves that they replace 100 losing trades, and you're not going to have that many. So, yeah, just my 2 cents on that. I am interested. I think in the weekly, on the weekly, let me go look at NVIDIA real quick on the weekly. I'm going to keep this, I'm going to do this on another screen. Give me 1 second. Uh-oh, I might have asked my computer for too much. Me and my wanting to use the internet. All right, they broke through the open here. Now testing today's open. So that was yesterday's open. They broke through. Now they're testing today's open. And then the 660.78 will be first support, and then obviously the low, the pre-market low, and the put support will be the next level of support. We want this on Nvidia. Want this to be 1. Okay, so this is the weekly NVIDIA chart. I have my eyes on the other chart too. Um, so you got this sell right here. It didn't work out, but then you got this sell at 136 down to 86. So that was 14 and 36. That's 50 points on a 136 stock. So that was a 15% drop, crushed. You got the buy right here at 110. They took it all the way up to 184. So that was $74. That's a 70% move right there from April. Pretty solid stuff there. And now you're in the middle of this sell that we got right here at 177. There has been no sell stop issued, and that's because the market sees this as weak. So take that with a grain of salt. The market or the indicator sees weakness still in NVIDIA and would favor down. Now it is at the weekly 21, so it's at pretty strong support, which is another reason to kind of favor it higher. And then, maybe you get issued a sell stop there, but just take that as it's not the strongest move down, but the indicator has not seen this as strong up either, and it's been correct. This week was strong and it didn't issue a stop because it got sold right back into. So just if you want that FYI there. Okay, we may get a buy signal here, so let's take a look and see what we got going. Or not. John, welcome to the stream. No problem, George. Are we looking for a call? Yeah, so you're always looking for the opposite of what's on the screen. So if there's a sell on the screen, you're looking for a buy. If there's a buy on the screen, you're looking for a sell. When does that change? You got a buy right here in the pre-market, and then you got a stop right here. So you had a buy signal and a stop. That stop puts us back into sell. So now we're looking for a buy again. So you get a buy and then another buy. But if you don't have a stop on the screen, you're looking for a buy signal. So strong volatility out of the market today. They've tested the pre-market low. They got above the pre-market high, which again I think is a little bit of a potential red flag for the bears, getting above the pre-market high. But we were looking for them to come exactly back to that area, that 67.13 area, and they came to 67.08. So as of right now, the bears still control because we're below 67.13, but they really need to break the pre-market low to kind of enforce that they have control. Otherwise, they're just making a higher low and creating a setup for the bulls. Just as an FYI, those coupon codes do go away at the end of the stream, so keep that in mind. If you want to get the indicator for your own use, so you don't have to wait. If you're in the rooms, you don't have to wait for me to type it in because that can take a while and you get behind. Or if you're on the stream, you have a delay. Or if you just want to trade on your own and you're not in the rooms, make sure you take advantage of that. I don't discount the yearly very often. And you're also getting some great extras for being on the live stream today. Make sure you like the stream, please. And then also at noon Eastern here in about a half hour. If we don't have another trade, or even if we do, I'll likely be shutting it down for the day. One, always nice to walk out a winner, and two, live streaming for this long. I have another call, a live call I do with the people in the paid room at 1. I just need a break for lunch and kind of get my mind off of staring at 5-minute bars and explaining them the entire time. Which, don't get me wrong, guys, I'm happy to do. It just gets a little long after a while. Still moving down. Seeing some consolidation here at support. Nothing shocking there. Again, the bears really want to break the pre-market low to kind of signify that they're still in control. You know, taking it up to resistance and then the bears selling is okay as long as they follow through. If they don't follow through, they've just created a higher low, and we'll see what happens here. Just so you guys are aware, I am sitting on 664. What is that? 663 as the call strike. Should we get a buy signal here? ADD is down to negative 570. It's been mostly falling. This 15 is kind of flat, but it's been consistently falling since about 720, 715. Volt has been consistently falling since 715 as well. So the bears are trying to do their jobs and sell. The buying volume was higher than the selling volume. So that's something to keep an eye on, but it also tells you the sellers didn't have to work that hard to bring it back down here. Gold and silver flat, Bitcoin not flat. 4 of the Mag 7 turning over. Meta, Microsoft, Netflix, and Amazon all red. The banks are red. AMD's red. Seen a lot of turnover here. RTY has turned red. Transports have turned red. NQ is trying to stay green. ES trying to hang on, but both are in jeopardy of turning red as well. I'm going to get a little bit of content. Guys, by the way, I know there's not a ton of you on here from my Facebook, but I'm never going to reach out to you. There's somebody copycatting me on Facebook right now. I'm never going to reach out to you through direct message and ask you if you want to get in some crypto scheme or some bullshit like that. Anybody who's been with me knows that ain't my style. I'm not a scam artist piece of shit. I'm going to say it. YouTube's going to ban me now. I'm going to be screwed. No, I'm not a copycat piece of, or a scam artist piece of shit that comes after you in deceiving ways and especially steal somebody's identity like that. Ignore and please report if you see anybody reaching out to you about that. Please report them to Facebook so that we can get them blocked and turned off. There's a lot of really, really great people out there these days. It's the 67. Hold on, I got to scroll up here, guys. Sorry. JG, in our afternoon meeting yesterday, you were so correct in predicting this bounce either way because if the weekly 21 EMA, I can't emphasize how helpful you are to the people. Thanks, Parveen. I appreciate that very, very much. That is my goal. Are we looking for a call? Yeah, doing a sorry, I missed that one earlier, Parveen. Welcome to the stream. Is the 6713 zone the 618 retracement of the smaller 1-2? No, I believe it. I got to look. I think now you got me confused. No, it's the big. I think it's the bigger one. Pretty sure it's the bigger one. Yeah, the smaller one's been fulfilled at the 1.0. Let me see. Yeah, the bigger one. So you have A and B, and you got your 1.0 that we hit. They came back to the 618, and now they're coming back down, hopefully to break through the 1.0. That's what we'd be looking at there. Sorry if you said it. Got lots of advertisements and had to reboot my YouTube laptop. I think that's just part of YouTube. I can look and see. I don't know if there is or isn't a thing to turn off the ads. All right, testing the open here, 660.77. They get below that, they're likely to come down and break through the pre-market low. Bulls will really want to defend here. They do not want to give up the open because then screens turn to red and from green to red, and that makes people unsettled, and they will typically not want to buy once that starts happening. So bulls really want to defend here. We'll see if they're able to strongly enough. Remember, they have to get back above the 8. The 8 is the momentum bar. They have not been able to do that since the top. Once the bears got through that, they have kept below it. They even back tested it once and failed. So as long as they're below the 8, momentum is down on the 5-minute chart. So that remember that is a 5-minute thing. Bigger time frames have different um, moving averages or levels. But as far as the short term, the momentum is down. Will, you had to reboot 5 times? Are you on a Commodore 64? Like, what do you have? I'm just kidding, but 5 times, my goodness. I hate my computer, and I don't have to do that. Usually it's just one reboot and I'm good. My wife thinks I need to switch to a Mac, but I'm scared because I know everything, and now I'm, like a boomer. And so getting on a Mac means I got to learn a whole new setup, and I don't like that. So I don't know. Macs, I'm sure, are better, but uh, I don't like learning curves. Wow, Maxime's like YouTube support over here. I'll make sure the next one I try to turn them off. I don't think I'm gonna mess with it on this one. We only got about 15 minutes left, and I don't want to do something that crashes the stream. That would be silly. Guys, I hope you enjoyed the stream today. We only got about 15 minutes left that I'm going to stay on here. Even if we have a trade going, if you're in my live room, I'll keep updated there. But you just, after 3 hours of doing this, run out of things to say. 2.5 hours. I can only break down the market so many times when it's in the same range. Nothing's really happening. They've basically said we're going to spike it up, bring it back down, and settle it before the Fed minutes. We'll see if they start to accelerate to the downside or not. But yeah, nothing's really happened today. Are you trading next week? Great question, Otis. I will probably do a little bit of a live stream next week. I don't know how much trading will be on it, but the answer is yes. And I will probably have a live stream Wednesday, and that'll basically be my whole day. My daughter's off school that day and stuff, so I may spend, and then Thanksgiving's the next day. I think it's a half. Is it a half day? It's Wednesday half day. These are things you should know if you trade, and I don't. I don't ever keep up with the holidays. I literally have to check every single holiday to see if I get it off or not. I don't get Veterans Day, so I know that one's true. All right, pacing down into this low if they can get through it. We're still below the 8 here. They're testing it. They've been testing it a few times, but the bears have been holding, so we'll see if they can break through. I don't know how many more times I can say the same thing when we get down here and do this chop. Yeah, we're still on a 662 strike if we do get a buy signal down here. Joseph Rapp says no ads, no freeze, no problem. Paid Google Premium benefit. Fair enough. Everybody wants you to pay for something these days. including me. Check out that deal on the indicator. Man, what a transition. I should be in sales. I appreciate you guys being here, trading with me. It's been fun today. A couple more bars and we'll be either in a long and done or done. Shutting it down at noon. If you didn't hear earlier, if you're new to the stream here, just joined. We've been crushing it today. We got a buy on the first bar of the day. We actually got two. We got stopped out on the first one, and then it reprinted. We took it, and obviously that was a crushing trade, absolute monster win. And then the downside, we got the sell here right off the top, crushed it straight down. So if you joined late, you missed out. There's a little FOMO, but you don't have to miss out moving forward. Get that indicator. Deals on the screen, guys. I'm giving you the price action module. It's 2 hours of price action trading that I taught live. So there's a question and answer session as well. It's really valuable stuff. It goes hand in hand with the indicator and teaching you how to understand and see the things that I talk about on the stream so that you can also trade effectively and understand where the levels are to take profit and understand where the levels are to break through to squeeze and things like that. Do you think gold and silver is following the downturn because chance of rate hike is increasing? No, I think that the structure is just down. If they follow through to the downside, 350s where I would expect them to come to. I expected that when they started breaking out. They just happened to really accelerate that wave 3 a little further than I thought, which happens. It ain't that big a deal. I had money in it, so I was happy. But the pullback here I think is pretty standard, and I don't think gold or silver cares about the rate hike, honestly. Or non-rate hike or non-rate cut. Silver has turned red. Silver stronger than gold recently, and that is if they both break out and silver stays running the way it is, which is pretty strong. If it remains stronger than gold, then that is the sign of the end of the metals complex run. Silver usually ends with a parabolic run, and then they all crash, and gold usually tops first. So keep that in mind. If silver continues to lead gold higher and then turns parabolic, that would be a very, very big sign that the run in metals is coming to a close. That's a classic ending phenomenon of the metals market, where silver gets parabolic late and catches up. I have the indicator. Can I add to the length of time with your Black Friday deals? Are you saying that you have the monthly indicator, and if you wanted to do the yearly, you would? Could you do that? Is that your question? If that is your question, Otis, that you have the monthly right now and you would like to switch to the yearly and take advantage of that deal, then the answer is yes, you can do that. Oh, you currently have the yearly? Okay, then unfortunately, no, you already have it. Are you trying to get a second year? Okay, we are starting to see the potential for a buy signal with just 2 candles remaining, at least on the live stream. Obviously, there's more candles remaining in the day. The ES is starting to show potentially flipping into a weakening sell market, which would produce a buy signal, but the Nasdaq is not. So that's why we haven't gotten the signal yet. And remember, guys, don't front run. What I mean by that is I just mentioned that ES was flashing a little bit of weakness here, but it hasn't fully converted into a buy signal. We can see the market show weakness and then come back and show a lot more strength You see it all the time on trend days where it pulls back just a little bit and you get that buy or sell signal, and then it goes the other way. It stays on trend. So don't front run the market and think that just because there was a little weakness that flashed there that we're going to get a buy signal. That definitely doesn't have to happen. It certainly can, and this is a place that would be okay. We're at support right now. They could make a higher low here. I'm sitting on still sitting on 663 right now. I may switch that to 662 though. No, I'm gonna keep it at 663. 663 strike. If we get a buy signal, that's where we're at. We don't have one yet. We still have normal market down conditions until we get one, but we are seeing the potential for one. There it is right there. 172. And our stop is 661.35. So we got 663 for $1.72 on a 661.35 stop. At 189, we will move our stop up if they get there. If they don't get there, then we will be done for the day. Right now it's the 8. They got to get through the 8. If they get through the 8, then we will likely press up to that 21 there, about 662.70 or so. What's that at? Yeah, 662.68. And then we'll see what happens there. Barely held on there. $0.02 hang on. Let's see if they can get us up to where we can at least move our stop up and hopefully make some money. More money, I should say. We've crushed it today. Really awesome day. It's a big, beautiful day. It's a day like you've never seen before. Nobody's ever seen a day like this. I don't care if you're a Republican or a Democrat. The way that man talks is hilarious. I didn't take this. Don't want to ruin a good day. Yeah, I understand, but sometimes you get just to have a better day. I might have already read that comment. I don't know. I can't remember. My brain's done today. My chart does not show a buy indicator. Sometimes TradingView uh, has issues. Maybe try to refresh your screen or make sure your settings are correct. MJM says his does. Mine does on the screen. So hopefully you have you can get that figured out. That's what the J stands for in Jacob. Is it? Donald J. Trump is Donald Jacob Trump? I didn't know that, if that's true. Huge. Yeah, I can show my settings. Give me a minute here because I got to make an update. I think I'm going to have to make an update to the stop here. We're so close to moving our stop up there. Come on, little guy. You can do it. There's the settings right there. You want it on ES, NQ, and 2, and you want your pre-market and post-market trading on. Make sure you have that as well. Oh, the J doesn't stand for Jacob? Then I'm not sure where you're going with that, Matt. All right, we can move our stops up. 661.60. Move your stop to 661.60. Let's see. Then it's another 9 cents. So that was 80.97. Okay, let's move our stops to break even. Risk-free trade, always nice since we're hitting the 21 here. 206 is our take. Man, we got within a half cent so far. If they get back up there, they should get it here. Let's see. We have no risk here, so we'll let them go. They got to 205, and 206 is the take. Actually, 205.5, which is super annoying. It's 205 again. Come on. There it is. Close half for 206. All right. Stops are at 172. We are in this trade for as long as we are in the trade. I am going to wrap up the live stream, guys. I know we're mid-trade right now, but we are already in the money. We have made money. Just to make sure you don't let it turn bad. Stop out at the 172 if that's what they give you. And, well, let's just see if they stop out real quick, if this comes down. Otherwise, we're going to let it run. Make sure you just move your stops up. I would look for profit taking around VWAP. So 663.78, and then around 665 would be my places to take profit next. But we'll see if they stop us out here. If they do, I will I'll hang out till this bar closes. If they don't stop us on this bar, though, we will. I will go ahead and I'm going to go ahead and shut down the stream so I can take a little break before my call at 1. And there is the stop out. All right, guys. So we stop at 172 there, 189 average exit. Wonderful day. $189. All right. We get all this updated here, and then we'll say our farewells. Wonderful day, guys. If they break down below this pre-market low, I would expect them to continue to the weekly 21, which is going to be significantly further down from here as far as today for a single day. It would be, yesterday's low was close. It's going to be below that. It's going to be around 652 or so, which happens to be the one-day minimum. Let's actually go to the weekly on the SPY and see where it's at. So the SPY's 21 is all the way down here at 650. That's a little bit interesting. They could definitely come down and tag that. There's a big support shelf down in these areas. So keep an eye out for this level. Maybe not today. That's another 110 points to the downside. I don't necessarily think that's going to happen, but maybe with NVIDIA on top of that, we could come see this level and then bounce from there. But 650 is the level for the 21. That's kind of where I expect them to end up coming down to overall. They haven't been there in a while. They're still fairly far away from it. So keep that in mind as we watch the rest of the day. Incredible stream today, guys. I appreciate you being here. Make sure you get signed up for the indicator. Those things are going away. Happy Thanksgiving to you, Will. Thank you. Thanks for all your constant support. You're an awesome, open-hearted person. I love you and your wife. Thank you. I appreciate that, Maxime. Thank you, everybody. Good luck the rest of the day. Don't overtrade. You got fed minutes later. Just let them go. They can be wonky. You can be trapped in a lot of places. I would just let it go. And then you have NVIDIA after the bell, so be careful there. That's going to be a movement. The market is going to move on that. Which way is tough. I favor the downside. I've said that. The only way I'll start to favor the upside is if they get all the way down to the 20, which doesn't seem likely today. Or if they get back above this high, I might favor the upside then. But I favor the downside. That doesn't mean it's going down. That just means it's what I favor. Have a wonderful day, guys. If you're not on the stream next week, have a happy holiday weekend next week. And I'll be here at least early in the morning for maybe an hour or so. I don't know how much trading we'll do, but I'll go over the market for the weekend and get everybody set for that. All right. Thanks, everybody.